All right, let's get right into it. Today, we're going to break down a really powerful concept and price action that's all about understanding pure, unadulterated market momentum. We're talking about breakaway gaps.
You know the feeling, right? We've all been there. You spot this perfect-looking fair value gap on the chart. You get ready, you're patiently waiting for price to come back, tap into it, and give you that picture-perfect entry, and then it just doesn't. Price just keeps ripping in one direction, leaving you on the sidelines. Super frustrating.
Well, there's a name for that. That's a breakaway gap. And when you see one, it's one of the loudest signals the market can possibly send. It's basically shouting that it has picked a direction and it has zero plans of looking back. So let's lock in a clear definition here. A breakaway gap is, at its heart, a simple fair value gap, an FVG. But here's the key. Price never comes back to it. It leaves it totally unmitigated, which is just trader speak for unfilled. Now, this isn't some random accident on the chart. It's a deliberate message from the market showing intense, one-sided momentum. Okay, so seeing these after the fact is easy. The real trick, the real skill, is learning how to spot them in real time, as they're actually forming. To do that, we need to be on the lookout for three very specific clues that tell us, hey, this isn't just any FVG, this is something much stronger. And here are our tools for the job, our confirmation toolkit. So after a fair value gap forms, you're going to be watching like a hawk for one of these three things to show up after it: a breaker block, an inversion FVG, or a balanced price range. When you see one of these form, that's your confirmation. That's what tells you the market is serious and that what you're looking at is a real breakaway gap. Let's walk through the bullish version. So first, you get a bullish FVG. Simple enough. But then price doesn't pull back. Instead, it pushes even higher and creates a new level of support, a new floor ahead of that original gap. Now, this new floor will be one of our three tools. Maybe it's a breaker block, or maybe price just blasts through a small bearish FVG, flipping it into support. That's an inversion FVG. Whatever it is, that new support level acts like a guard, preventing price from ever getting back to that first FVG. And just like that, it's locked in as a breakaway gap. And visually, it's really straightforward. A bullish gap is just a clear space left behind by a powerful up move, signaling heavy buying. A bearish gap is the opposite, a void created by a big down move, signaling heavy selling. That visible empty space on your chart, that's your first clue that one side of the market is completely in control. Now, for a bearish move, you just flip everything we just said on its head. A bearish FVG forms. Price then dives lower and puts in a new ceiling, a new level of resistance ahead of the gap. And again, this new ceiling is going to be one of our three confirmation tools. It's what blocks the price from ever rallying back up to fill that initial gap. So we know what they are, we know what they look like. Now for the million-dollar question. What do we actually do with this information? And just as important, what do we not do? This is all about strategy.
This is it. This is the first question every single trader asks. You see this explosive move, you see that gap just sitting there, and your brain immediately thinks, perfect, I'll just set my entry order right there and wait for the pullback.
And the answer is a hard, unequivocal no. This is maybe the most important rule of all. The entire point, the very definition of a breakaway gap, is that price leaves it behind. Trying to enter there is literally like waiting at the station for a train that has already left and is now miles down the track. It's not coming back for you. So you have to make a mental shift. You have to stop seeing it as a place to enter a trade. A breakaway gap is not a setup, it's a signal. It's the market giving you a massive piece of intel about where it's headed next. So what is it signaling? Well, it's screaming that there is incredibly strong one-sided momentum. It's telling you there's a very high chance the trend is going to keep going. And maybe most importantly, it acts as a filter. It tells you to immediately stop looking for trades against the trend. Trying to fight that kind of momentum is one of the fastest ways to lose money. Okay, let's pull all of this together into a really simple, practical checklist you can use when you're watching the charts unfold live. Here we go. Step 1. Has a new FVG just formed? Check. Step 2. Did price continue to move aggressively away from it? Check. And step 3, this is the clincher. Did price then create a breaker block, an inversion FVG, or a balanced price range just ahead of that gap? If you can say yes to all of those, then congratulations. You've almost certainly spotted a breakaway gap. And let me be perfectly clear about the biggest mistake you can make here. Do not chase the price. And for the love of your account, do not try to fade it. Chasing it means you're buying high and selling low, a terrible entry. And fading it, That's like trying to stop a freight train with your bare hands. The whole point of this signal is to keep you out of those terrible trades.
Now, of course, nothing in the market is ever 100% guaranteed. If, for some weird reason, price does come all the way back and closes inside that breakaway gap, the signal's off. It's invalidated. But here's the bigger picture on risk. Using this pattern correctly is a powerful form of risk management in itself, because sometimes the best trade you can make is the bad trade you don't take.
So I'll leave you with this to think about. Now that you can spot these huge signals of momentum, now that you know how to use them to filter out bad ideas, how does that change your approach? It should shift your focus away from the gap itself and toward finding a smarter, higher probability entry further down the road, in the direction of that powerful trend.